Good morning, good afternoon. My name is Greg Horsemeyer. I'm the editor-in-chief at DTN, and welcome to the March 31st Grain Stocks and Prospective Plantings Report. Glad everybody could join us today, morning or afternoon, wherever it is where you are. I'll be your moderator for today's event, and as always, running today's show and the brains behind this operation is our DTN lead analyst, Rhett Montgomery. Rhett will be sharing his reaction to the events today and both what we heard on prospective crop plantings as well as where grain stocks settled up. I'll remind everybody that today's webinar is a listen-only mode, but you can ask questions at any time. If you'll open up that Q&A box in the lower right-hand corner of your screen, you can type questions in there anytime as they come in to your mind. We will hold those until the end of the webinar. Should have plenty of time for questions today. The numbers are pretty quick and easy to go through, so I think Rhett will be pretty fast with it today. So we should have plenty of times for questions about this or anything else that you guys have on your mind. Again, this is being recorded as always, and we'll send out a email with a rebroadcast link, usually within about 2 business days of when we finish. And you can find that on the dtn.com website, the same spot where you sign up for these webinars. With that, I'll turn things over to Rhett. Rhett, we're unsurprisingly a little bigger on corn and a little smaller on soybeans in terms of what we expect this year, right?
Yes, thank you, Greg, and good afternoon, everybody, or good morning, depending on where you are in the country. So kind of a steady report, I would call it. A few surprises in there that came in maybe slightly above what the average analyst was expecting on the corn side, maybe slightly less on the soybean side. I guess I'll just lead us off here, just heading into our discussion here today, just a quick market update. We have corn futures currently trading up 3.25 cents at 456.5 on the May board. New crop futures are even actually right now, unchanged at 442.25. Soybean futures are down 7.5 right now. They've been chopping around pretty good since the report came out. That's at 1015.5 on the May board. Meanwhile, new crop futures also down 8.75 cents out on new crop. A bit surprising given the acreage that we'll get into, but and then finally on wheat markets are leading the way higher, up 8 to 12 cents, depending on what variety you're looking at. Kansas City wheat is up 8 right now at 559.75 on the May board. So just to give you a base here of how we're kind of reacting in price-wise following the release here. But in terms of the actual numbers here today from the USDA, start on the planting side and we'll work our way back to the grain stocks. Looking at the top 3 that we really concern ourselves with, corn, soybeans, and wheat acres. Actually, between these 3 did account for a slight increase in total acreage between the 3 commodities. Came out about just under 500,000 acres increase year over year, 224.2 million acres between these 3, corn, soybeans, and wheat. The total principal crops areas, which includes 7 or 8 commodities, was actually about just over 1 million acres, 1.2 or so million acres lower in the U.S. That came in at just under 310 million acres between all principal crops in the U.S. So kind of a mixed bag there of total acreage down, but these 3 in particular seem to get the attention. With corn obviously leading the way. So breaking it down here, corn continues to really be choppy. Obviously, looking back through recent history, it's really hit its peak there in the years immediately after 2010, and it's pretty much turned sideways with any given year's price action dictating kind of how it varies from that. Really, it's a pivot right around just above 91 or so million acres, and really is the price ratio or whatever metric you want to use kind of dictates. Weather is obviously a huge part of it on where we vary either side of that level. So this year anyway, USDA is expecting a sharp increase here in corn acreage. as many were expecting. 95.3 million acres is what they put in this morning's report. That'd be up 4.7 million acres from 2024, which the average trade grass, was expecting 94.2. So we did come in slightly higher, but it was at the same time within the range of estimates released by the Dow Jones survey, is what we like to follow. So within the range of trader estimates there. So maybe slightly bearish to the market, as we'll talk about in more detail, but really within expectations, given especially how resilient corn prices had been through the late fall and early part of 2025 as compared to soybeans, which seems to be the vast switch is probably soybean acres going straight over to corn acres. Soybean acres along those lines down 3.6 million acres to 83.5 in the USDA estimate this morning. That was slightly less than what the average trade guess was calling for. Average trade guess was calling for 83.76 million acres. So we did come in slightly below that, but again, within the range of trader estimates. There was estimates all the way down to 82.5 and all the way north of 85. So pretty much within what was reasonable for this report. And then if there was a surprise on these three, it was definitely in the wheat side. 45.4, million acres of wheat. That's down 680,000 acres of wheat. And this was kind of the surprise they were expecting on the Dow Jones survey, at least, for a slight increase in year-over-year wheat acreage of about 300,000 acres or so. So this is actually directly at the bottom range of trader estimates. So pretty close to being lower than what any analyst put out there in their official estimate for this report. So if there was a bullish surprise or a surprise in general in this report, probably came on the wheat acreage side, which we'll talk about the breakdown of that a little more detailed here shortly. Starting with corn acres, just looking at how that shook out across the different states. Increases pretty much where you'd expect them to be. Iowa obviously leading the way higher with expecting 600,000 more acres of corn there. Nebraska's up there. Those are your two leading states, but really steady increases across the pretty much everywhere you'd expect. Illinois showing a slight increase, South Dakota, Minnesota. Looking on the right there, you can see your breakdown of the states that typically account for the top 8 corn planting states. You can see how those shake out. Obviously, Iowa continuing to lead the way for corn acreage in the U.S. So really no surprises on this map. The acreage breakdown really came in how you'd expect it, given a 4.7 million acre increase across the U.S. Looking at the same kind of exploration in soybean acres, kind of the same deal. The states you'd expect to lead in a drop of acreage came out pretty much how you'd expect. Minnesota, Iowa, the Dakotas leading the way in declines in acreage. Nebraska right there. So pretty much the states that are showing increases in corn are showing not exactly even, but close to 1-for-1 changes in declines in soybean acres. So again, on the right there, you can see looking at them, top 8 states, Illinois, again, expecting to lead the way on soybeans, followed fairly closely by Iowa and then Minnesota. So really the northern plains, kind of western Midwest parts of the U.S. leading the way in the decline in soybean acres in 2025 as estimated, of course. Looking at the spring wheat expectations, this was, again, on a little more surprising. Wheat or spring wheat acreage by itself was expected to come in right around 10.5 million acres. This doesn't include durum wheat, so just other types of spring wheat, hard red spring primarily. It actually came in just above 10 million, even 10.02 million acres this time around. So little bullish surprise there on the wheat side of things anyway. That's why you have Minneapolis futures leading the way higher right now with about 12 to 13 before we started talking. So looking at those declines, again, not a huge surprise. A little bit, I guess, surprising to see an increase in Minnesota. Probably seeing some switches there from soybeans to spring wheat, but really then across, North Dakota obviously leads the way significantly in spring wheat acreage in the U.S. They're expecting a small decline there, and then an equal amount of decline in Montana as well. So overall, lower than the traders were thinking, and again, just towards the bottom end of the range. There was an analyst estimate out there at 10 even, so right at the bottom range of what was expected coming into today's report. Looking closer at U.S. wheat categories and just breaking it down, as you can see, pretty steady declines across all major categories of wheat, starting with our winter wheat, seeing that at 33.3 million acres versus 33.4 million acres a year ago. Noteworthy that this is also down from the 34.1 million acres that the USDA estimated in the January seedings report. So between January and now, they've refigured that number and found less winter wheat was planted last fall. Then obviously our spring wheat that we just discussed, a decline from last year, and then Durham decline as well. They were coming into this report pretty much expecting steady Durham planting this spring, but did see another decline there. So all totaled brings us to our 45.4 million acres versus 46.08. So about 600,000 acres decrease year over year there on the wheat side of things. Quickly, just looking at some other key crops. Again, nothing super surprising where there is a clear connection to say soybean acres decreasing and an outside commodity gaining. The obvious one here is attributing to the sharp rise in corn acreage is likely the cotton acreage decrease. Cotton acres estimated this time around at 9.87 million acres. That's an 11.8% decrease from the 2024 plantings, and that's also slightly less than where the USDA put out in their Ag Outlook form in February. It's much more in line with the National Cotton Council's number, which I think was closer to 9.6. I don't have it in front of me exactly, but it came in slightly above what they were thinking, and they put that estimate out in February as well, actually right before the week before the USDA put out their Fed Outlook. So that's probably your biggest contributor to the increase in corn acreage right there in the southern part of the U.S. That 11.8% decrease there. Otherwise, other major categories, barley acres, a slight decrease, a pretty sharp increase percentage-wise for sunflower acres, although you're talking pretty small acreage relative in total, so a big percentage change it can be misleading, but it did jump to expecting over 1 million acres of sunflower acreage this year compared to last year. Another interesting one to me, just going to point out, it was canola. When I first saw the surprising decline in soybeans that came in larger than expected, my initial thought was that we were going to see the Dakotas with more canola, specifically in North Dakota. We actually, as estimated, are about even, just a slight decrease this year. So again, no clear winner for those northern plains areas and switching to a specialty crop or one of these other crops. It's really just pretty much a straight switch from soybeans to corn. Of course, it's only been out here for a couple hours. I've got due to some more diving into these numbers here throughout this week, but right now, within the first hour of looking through the numbers, doesn't seem like a huge shock in terms of an acreage mix in terms of these outside commodities. Just to touch base on some weather here heading into spring, starting with corn. As you can see here from the U.S. Drought Monitor database and from the University of Nebraska, this is as of last Thursday. Approximately 16% of corn production area is experiencing drought here heading into planting. Likely, doesn't interfere right away with planting progress. The incoming storms this week are probably more of a concern on that front. But there are some concerning pockets in terms of once we get the crop in the ground and into the growing season, if we don't start receiving some moisture, specifically that area in eastern Illinois through the central part of Indiana would certainly be a concerning spot. And then your western corn belt, obviously very dry through the northern parts of Nebraska and most of South Dakota. Obviously, that's done a number on the winter wheat crop, where the crop there is rated pretty poorly. It's something like 20% good to excellent in Nebraska and something similar in South Dakota as of their last rating. So, but if we get into the corn growing season and that hasn't reversed, then we're certainly going to most likely have to start penciling something lower than the USDA's trend line yield, just on a lower expectation in the western corn belt, given all tying back obviously to the increase in acreage in corn we're seeing, which as we saw, Nebraska was a leader on that first map in year-over-year changes. So some definite concern areas to keep an eye on. That area in Illinois, then obviously the western corn belt here is what we'll be keeping an eye on here heading into spring and then beyond. Same kind of study on soybean areas, and it's really the same concern areas. That same area in Illinois and Indiana will of course be a concern. Again, Illinois, as we talked about, expected to lead the U.S. in soybean acreage. So any kind of drought there in the south or the central to east part of Illinois will certainly be a story if not alleviated here heading into the growing season for soybeans. And then obviously decline in acreage there in the western corn belt, particularly in the northern plains, but still a concern, especially once you start talking about the southwest part of Minnesota, your eastern part of South Dakota. Those are key growing areas, as you can see by the dark shades of green. So any worse severity in this or persistent in just those pockets will likely have repercussions felt in the bottom line for soybeans. So something to keep an eye on here heading into the growing season. And then lastly, looking at winter wheat, obviously the winter wheat in a separate part of its growth process, currently in the greening period through much of the southern plains areas. Approximately 14% of the winter wheat area was in drought as of last Thursday. That's somewhat of a misleading number, I will say. The previous drought monitor actually had that number at 34%. So they downgraded a lot of the, it's their D1 category, so their moderate drought category. They downgraded that to abnormally dry. So if you include abnormally dry, it was steady week over week, and that's at 57% of the winter wheat growing area is rated abnormally dry or in some form of drought. So the 14% makes the situation currently seem a little, less concerning than I would say it is. Particularly several areas that are jumping out as problem spots. Starting in the east for your soft red areas, Michigan in a high level of drought across that state. A pretty leading producer in soft red winter wheat year in and year out. Obviously, when you're talking winter wheat, it's Kansas and Oklahoma, Texas, Colorado. Between those states and then the southwest part of Nebraska is north of 50% of winter wheat production. So those are going to get your attention. And then also, the north part of Oklahoma and the southern part of Kansas is a concern area. and the rest of those areas, I would say around that fringe are still rated as abnormally dry, given the time of year. So definitely needing some rain as we advance further into spring here, into that greening period. And then obviously looking up in the northern plains, as mentioned, your Nebraska and South Dakota crops are your poorest rated winter wheat crops pretty significantly. There's no one really even close. It's, as mentioned, it's something around 20% of the crop is rated good to excellent. So I believe it's something around a third of the crop rated poor to very poor in either of those places. So, and then Texas's crop, the drought monitor doesn't really reflect it, but Texas's crop is close to a third rated poor to very poor as well, as of their last crop progress report last week. And they will put out a new one, I should say, for anyone interested. They'll put out new ones for Kansas, Oklahoma, and Texas and Colorado this afternoon at 3. The other states, they'll resume next Monday. The national crop progress report will resume on Monday, April 7th. But for now, the Southern Plains do release a weekly one in the meantime, just because they're a little more important, obviously, in the terms of the winter wheat. They want to keep that updated more often. So that will be coming out at 3 Central this afternoon for anyone interested to see how those crops are faring. Jumping into the grain stocks here, starting on the corn side, nothing's incredibly surprising here. Corn stocks came in at 8.15 billion bushels of corn on hand as of March 1st. This was a decrease from 8.35 billion bushels a year ago. Still the second largest March 1st stocks in 5 years. Pretty much in line with what traders were expecting, slightly less, about 50 million bushels or so less than the average trade estimate heading into the report. So nothing really out of the blue that was, but definitely I think the reason we're seeing corn trade up despite the, maybe more bearish plantings numbers is that these stocks did come in slightly below the average trade estimate. The flip side of that is second quarter demand at 3.92 billion bushels was the second largest demand for corn for the December through February period on record. The only year that beat it was 2020 to 2021, where we used north of 4 billion bushels during that second quarter. So demand continues to be very impressive. It'll be interesting to see the Census Bureau here in the first part of April will officially update us on February exports. And depending on where those come in, it could be the best second quarter for corn exports that the U.S. has ever done. In fact, most analysts are expecting it to be to show that. So we'll see how that comes out here in a week or so when the Census Bureau updates that with official numbers. But either way, very impressive usage for corn through the second quarter. Obviously, as these prices have been pretty stubborn to rally, despite what the stocks would maybe suggest they need to, has probably lent itself to more demand just due to a more affordable price of corn this year than compared to obviously 2020 through 2022 in those years when corn was relatively expensive. Looking at U.S. soybean stocks, pretty much run of the mill here with what was expected. March 1 stocks of 1.91 billion bushels were a slight increase over last year, about a 4% increase. Meanwhile, your average trade guess was calling for just under 1.9 billion bushels. It came in about 15 million bushels above that. So nothing major, nothing majorly bearish there to me anyway, mainly in line with what was expected. Meanwhile, your second quarter demand for soybeans at 1.2, just under 1.2 billion bushels, was again a respectable number. It wasn't incredible or anything as like compared to corn, but I would call it average to slightly above average for the second quarter of a marketing year. So down from the obviously the record demand years in 2020 and 2021, but still a respectable number all in all, and still strong demand, mainly led by record crush demand through the first half of the marketing year thus far. And then lastly, looking at March 1 wheat stocks, these came in, of the three, came in the highest versus the estimate at 1.237 billion bushels. This was about 17 million bushels higher than the average trade guess coming into it. So the biggest deviation to the bearish side anyway, corn obviously came in lower to a higher degree, but still a sharp increase versus last year. We were just over 1 billion last year, 1.09 million bushels. So, that should be billion bushels on that second line there. So a little bit of an increase there. It is the highest March 1 stocks for wheat in 4 years. We are estimating the ending stocks to be the highest in 4 years as well, or the USDA is currently. So that tracks, given how they're seeing the ending stock shakeout, that we would be along the same lines here. Obviously, at this point, with only 1 quarter or less than 1 quarter of the marketing season to go. Implied third quarter demand for wheat was 333 million bushels. That was fairly average looking back across historical years. Obviously not a record, but not the lowest either, kind of right in the middle of the road in terms of what you'd expect for the third quarter of a wheat marketing year. In conclusion, just to sum everything up, corn, I'm between the two reports, I'm calling neutral. We did receive higher than the average expected acreage, but again, it still fell within estimates. It's always hard to tell coming into these what percent of something is, what I call, quote unquote, priced into the market already, meaning that, through late February, with the USDA Egg Outlook Forum, that obviously put out a 94 million acreage number. At that point, the market started to, sell out of corn futures, drove corn futures down quite a bit. Within that, there is likely a lot of traders expecting a number north of 94 million acres. So now that that number has been published, it's always kind of difficult to tell when it will be, once the actual figure is in hand. Might have the opposite effect of what you might intuitively think, just due to the fact that these traders have already positioned around a number north of 95 million. It was maybe somewhat surprising to some, but overall, don't see it as a reason for this corn market to sell off, any more than it's already been done over the past month, especially considering the second part here is that the March 1 stocks were slightly lower than the average estimate. So it sets up an interesting tug of war between old crop stocks and new crop potential. Again, the weather is likely going to lead that story and give favor to one or the other. It'll be interesting to see this week how quick traders are to maybe put that acreage number behind them and start focusing purely on weather as well as the stock situation. And as we'll talk more about in the April WASDE discussion, Brazil is going to be really interesting through April. They're going to be the one to watch because their second corn crop will be coming into pollination towards the latter half of April, and it's not looking great right now towards the potential there. It's looking really hot and really dry through the middle part of April, so there's really no room for error either there. They are carrying in the lowest amount of corn stocks in over 20 years. So if we get a bullish surprise there with a less Brazilian corn crop than expected, then I expect, a weather event at the same time in the U.S. could really start to put some buying pressure on the bottom end of the corn futures, especially given how much we've dropped over the last month. Jumping to soybeans again, calling it neutral here. Planting intentions slightly lower than average, but the March stock slightly higher. Again, it kind of ties into that same discussion where traders since the end of February have been pretty much expecting acreage to be in that 84 or lower million acreage area. The stocks are maybe a bit of a bearish, sour note here for today's reports, but overall, it doesn't really add anything that we didn't already know. And, especially when you combine South America into the equation with, what at this point's pretty much guaranteed to be record production between Argentina and Brazil. This doesn't, the numbers today don't really add any more bearish pressure in my mind to what we already knew on the soybean complex. And then lastly, I'm neutral to slightly bullish on wheat. I am giving it maybe a tick up in bullishness compared to the other two. I'm probably letting some of my bias towards the weather sneak into that a little bit, just because I think, that reduction in acreage, and given just how dry we are heading into the greening period for the winter wheat crop, and in combination just with how much these wheat prices have sold off in the last month plus, really makes me think, after setting contract lows in Chicago and Minneapolis futures last week, really makes me think we're nearer to the long-term support at this point, and traders may be looking for an area to start taking some profits on some of those relatively new short positions. And the weather right now and less acreage certainly is the catalyst to maybe propel wheat futures forward here. So time will tell on that, but I did see today's numbers as having maybe a slightly bullish flavor to them. So that pretty much sums up this round. Next WASDE report noted it will be on Thursday, April 10th. So again, just as a reminder, the USDA won't include any new crop stuff in this April one. It's kind of a report that's used to tie together the old crop situation. And then in our WASDE in May, they will use these acreage numbers, or if they find something different in that meantime, they'll use that, but they will use a new crop balance sheet in the May report, which will be the first look, other than the Ag Outlook Forum, but the first official look at the balance sheets for 2025-26 marketing year for corn, soybeans, and wheat. So something to look forward to there. But for next time, at least on April 10th, we'll be talking primarily about the old crop situation. So that's all I've got for today. Thank you.
Thanks, Rhett. I'll remind everybody we've got time for questions if you've got some to come in. Rhett, I would just, one of the questions I had was just a bit of a back to the weather issue. As you say, with this report behind us, the market will kind of begin to look more at weather and how that's going to affect things. We've got general forecasts for a little bit colder conditions, so maybe tougher planting possibly in April than we might be thinking about right now. Probably maybe not tougher than normal, but certainly not super great planting conditions. And again, still the talk of possible dry weather for a lot of the Corn Belt, especially the Western Corn Belt this summer. Still the potential for some weather markets, and this report doesn't really dampen that at all, does it?
Yeah, definitely. I agree with you completely there. These are just estimates as always, and a very early estimate is at that. So we're still kind of in the area where, anything can happen, and the planting window, in my opinion, dictates more than almost anything what those, finer nuances of acreage to end up being. If the weather is, ideal and, producers are going well with corn, maybe you see a little more corn going into the ground, or it could be vice versa. If, some guys like to do a little corn, switch to soybeans, and then switch back and finish out their corn. And at least where I grew up, and sometimes you had guys switch their planter to soybean, and the weather was just holding, and they, you end up going an extra quarter or two on soybeans. So I think what these acreage numbers do is they give you a kind of a blanket outlook of where to expect, the short-term pivot to be. Obviously, we're probably not going to drift from 95 million acres back to, 91 or something. You're not going to lose that many, barring a huge weather event or something, black swan event. But it does gives you an overall, just taster of what that first balance sheet in May should entail. And then from there, you fine tune that with your weather. And then obviously the yield will be the big driver of that. And that is 100% wide open at this point, especially given maybe some of the adverse weather we talked about, especially in the Western Corn Belt, can take a big bite out of your national yield in a hurry if you have some of those Western Corn Belt areas hotter than normal here heading into June and July.
A question on some of the corn disappearance. Do you think that goes to that corn disappearance is tied to the feed and ethanol production numbers? Where do you think that disappearance change came from?
For the demand through the second quarter?
I'm assuming, yeah.
Okay. Yeah. So, yeah, we're pretty much, I would say, leading year over year in every category of corn usage. But the one that's really impressive is obviously the exports are, through, through the end of February would have been running about 30% higher than the prior year. And as I said, the Census Bureau report here in a week or so could very well show that December through February corn exports as a record for that period. Right now, it would be 2020, 2021 would be the year to beat. So those are leading there. Ethanol production is above last year, pretty much in every month down the curve here. Ethanol is entering a period over the next few months where it will really go to pretty much average. It's pretty much the same during April and May as it is every year because plants do pretty predictable shutdowns during that period. But ethanol usage is really impressive as well. And then the feed usage one is the one that's always a wild card. I will say that coming into this report, I did my personal estimate for corn stocks was lower than what we ended up getting today. And I think where I'm probably off from the USDA on that is with feed usage, which would make sense that we're slightly lower than I initially thought, considering where the hog numbers came in last week. I don't know if anyone followed that, but the USDA surprisingly said that there was pretty much less hogs across every category in the U.S. Than a year ago, which was a real surprise to the market. Most people were expecting it to be 1% to 2% higher. But anyway, hogs eat a lot of corn in the U.S., something like 2+ billion bushels a year. So it would make sense that if you had less hogs during that period, probably fed less. And I'm guessing that's probably where my overestimation came in. But so that's probably where we ended up, slightly above what I thought anyway, but still very impressive demand overall, as I said, but leading primarily by exports and ethanol usage through that second quarter.
Yeah, to those hog numbers. I mean, also a little bit, probably less with some of the avian flu depopulations rather in the poultry market. Do you think some of that export demand and that record export demand, how much would you attribute to fairly stable and low corn prices, and how much buying ahead of tomorrow, the tariff day?
Yeah, so I think it's probably a bit of both, but I would attribute it a little more, I think, at this point to just a relatively affordable corn price. I mean, you look at it comparing, the different countries, Argentina, Brazil, and the U.S. The U.S. continues to have an offer out of the Gulf that's, not significantly at this point, with Argentina, starting to harvest some corn, but still slightly less than those competing countries. And so, when you have, one of the world's, largest percent increase in imports, is Mexico. And when you have them as our neighbor, it really gives us a leg up too in that regard. So when, they obviously had some drought issues through the 2022, 23, and have um, really sharply increased their imports of corn, and the U.S. is obviously positioned both in price and geography, very well positioned to be to be the supplier of choice for that. So that's, I think, what you're kind of seeing there. I think it probably is some buying ahead of what might happen here in a couple of days or a couple months, but mainly I think it's just buyers are going to go to the cheapest price, one way or the other. So, and the same goes for potentially with a tariff. I mean, I've said all along, we have to actually get the policies in place to be able to do the economics of, okay, now, what can Mexico buy corn from Brazil at, and can they feasibly do it with their infrastructure is another discussion. So, I think it's a bit of both, but mainly I tend to think the business tends to flow to where the price is the least expensive.
Great. Well, I think that looks like the questions that we've got coming in. I got somebody asking about, if and yeah, the webinar will be available as a recording. If you're signed up, you should get an email from us telling us when that recording is available, but it will be at the dtn.com website in the resources area. Basically, it's the same place that you go to sign up for these webinars. There's a button for recorded webinars or recordings, and you can go in there and find it and pull it down from there. Any last thoughts, Rhett, as far as the tariffs are concerned?
No, nothing really on the tariff front. Obviously, it'll be an interesting couple of days here ahead of that next deadline and what happens. It's kind of, the headlines have kind of gone back and forth. It was initially looking like the administration was going to be much more precise than originally thought with what their policy would be, meaning that they had it narrowed down to really 15% of nations, and we're going to do just a reciprocal tariff on those nations, and then industry specific tariffs were going to be put off to another time. Some headlines since have led to misleading things on that, and maybe there is going to be more of an uptick in industry specific policy. But again, I don't know if anyone honestly knows what will happen except for the powers that be. So it'll be something to definitely keep an eye on here. And unfortunately for the markets, might be a bit of a distraction here away again from fundamentals, at least for this week until we get that April 2nd deadline beyond us again. And then from there, I expect we'll be pretty quick to move into paying attention to mainly weather, as it's going to be, a really important window here of weather, both for the U.S. and for South America, as those Brazil and Argentina wrap up, and Argentina trying to get their soybeans harvested here shortly, and then Brazil obviously their second crop of corn will be heading into pollination here in just a few weeks. So really key period of weather here and dictating what grain supplies will look like for the next quarter and beyond of 2025.
Well, I thank you, Rhett. Thanks so much for your thoughts on this. That concludes our webinar for today. I want to thank everybody for joining on this last day of March as we get ready to roll into April. As a reminder, and again, I mentioned it, but today's webinar is recorded. If you'll go to the dtn.com website, and today's Monday, so by Wednesday or Thursday, that should be available there. And there also should be an email going out to those of you who signed up for the webinar, letting you know when that is available. We appreciate your participation today. If there's any other questions, you can send them to rhett.montgomery@dtn.com or greg.horsemeyer@dtn.com. We'd love to hear from you and let you know what's going on and what you're thinking about. As Rhett said, our next webinar will be the April WASDE, which is April the 10th. That's a Thursday. Looking forward to that. It will be the wrap up of the old crop a bit for some of the numbers, and interesting to see how that all lines out. You can register for that webinar also at dtn.com. Go to that resources and events webinars area and register for that. And we'll look forward to seeing you then. Just want to say we've got, I was talking to our ag meteorologist, John Brannick, trading emails with him just ahead of this event. We've got some severe weather rolling in the next couple of days, some stuff coming in from the Pacific Ocean and rolling across the plains. Be careful out there. It's springtime. The weather can change quickly. If you're out in the field or if you're on your way to the office, we just hope you'll be safe through the spring, and we'll look forward to seeing you in April. Thanks so much for attending.